Yo, pull up back with another video. In this video, we're going to talk about what is market structure and how to read it the correct way. Now, of course, there's some of you guys who probably never heard of market structure, and I'm putting you on all the game right now. But then there's also a handful of you guys who might have been trading for a while, might have an idea of what market structure is. But for some reason, when you seem to trade, the market seems to always go the opposite way. This video is going to help clear all that up and let you see exactly where the market is moving from every time frame. Now, we have two types of market structure. We have the bullish market structure, and we also have the bearish market structure. Isaac, what's the difference between bearish and bullish? Glad you asked. So, in a bullish market structure, you will have a series of higher lows and higher highs. It looks like a snake pattern, is the way I like to describe it. Now, first, let's start with the higher lows. The higher lows are what we have marked out in the blue dots. All that means is that the low that was formed was higher than the previous low. So look, we have a low, then we have another low. This low is higher than this previous low, making it a higher low. Same thing right here. This low is higher than the previous low, making it a higher low. This low being higher than this previous low, making it a higher low. You're going to find higher lows in a bullish market structure. And your higher high is going to be in your bullish market structure. And all that is saying is that the high that is printed is again higher than the last high that was printed. So you have a high, and we have this high, which is higher than the last high, making it a higher high. We got this high that is higher than the last high, making this a higher high. We got this high that is higher than this last high, making it a higher high. And lastly, you're going to have the breaks of structure. So whenever that high is printed in a bullish market structure and we start to have a retracement, once we break that high, that is now the break in market structure. The market is breaking structure. Then again, you'll have a retracement. Once you get back to that expansion, you'll have the break of market structure. And again, retracement back down. Boom. Once we get past that expansion or go into that expansion phase and break this high, we have a break in market structure. Now let's come to the bearish scenario. In the bearish scenario, we're going to have lower lows and lower highs. So it's going to look again like that snake pattern that you saw on the bullish market structure. Now pay attention to these green dots. You have a lower high. And all that is saying is that the high that is printed is now lower than the previous high. So look, you have a lower high. Then you had the new high, which is lower than the previous high, making this a lower high. And the new high lower than this previous high, making this lower high. And then lastly, this lower high lower than this previous high, making this a lower high. And now on to the lower lows. The blue dots are going to be your lower lows. And all that is saying is that the low that is being printed is now lower than the previous low. So boom, you have a low. Then your next low is now lower than the previous low. And then the low after that is now lower than that previous low. And the low after that is now lower than this previous low. In a bearish market structure, you're going to be moving down. You're going to have lower highs and lower lows. And in a bullish market structure, you're going to be moving up. You're going to have higher lows and higher highs. Now, let's say you created this lower low here, and you're like, Isaac, but sometimes when I'm trading, it doesn't actually hold. Those lows that should be protected theoretically aren't. What do I do then? Great question. Glad you asked. So in a situation like that, we call this a market shift. Whenever a low that should have been protected because we were in a bullish market structure becomes unprotected, this is the market shift. And when a market shift happens, now we're going from the bullish market to the bearish market. So what we can expect is for now to create lower highs with lower lows, lower highs with lower lows, lower highs with lower lows, and so on. And the same thing with a bearish market. In a bearish market, if one of the protected points is not protected, that would then be called our market shift. And whenever we have a market shift, we can expect to now create higher lows and higher highs. Higher low, higher high, higher low, higher high, and so on. Now, lastly, let's put it all together. The 4 hour time frame is going to be the red line, and we're going to make this yellow dotted line our 15-minute time frame. Now, why this is important. So one thing you'll notice about the market is that it is fractal, meaning everything repeats itself on every time frame. So in the situation in the 4 hour time frame where you're having the market trend up in a bullish direction, on the 15-minute time frame, you will simultaneously have the same thing going on a smaller scale. On the 15-minute, you're creating higher lows with higher highs. And as soon as we start to break shift market trends on the 15-minute, that is how you will then know that the 4 hour is going into a retracement phase. Because just think about it. For the 4 hour time frame to happen or a 4 hour candlestick to happen, that means the 15-minute candlestick has to happen 15 times. So essentially, we're gonna know what's happening for the move on the lower time frame for the overall higher time frame picture. So during that market shift, you will have now a bearish market structure for a 15-minute time frame. And as soon as we shift structures again, then the retracement phase is now over and the expansion phase is now back. So now look, we have a higher low with a higher high, higher low with a higher high, higher low with a higher high. And because the 4 hour was bullish, the red line, we knew that we should expect this to buy at some point and we should expect this to hold. This is why when you put time frames together, you're able to see, my 15-minute market structure shift, my 4 hours been bullish the whole time. Maybe it's time to start looking for buys again. And that's when you can take a position right here and then just go to your external range liquidity. But I hope this video helped you guys. I will be doing a free one-on-one session with 5 subscribers. If you want a chance to win the free 30-minute one-on-one sessions, you must be subscribed to the channel. You must follow me on my Instagram and TikTok page. And you must have commented and liked on 4 of my videos. I will be announcing those 5 winners as soon as we hit 100 subscribers. I will put all the links in the description. But that is everything I got for you guys on this video. Y'all be cool, y'all be calm, y'all be safe, and I'm gonna catch y'all on the next one.